Hey everyone! Welcome back to our channel. Today, we're diving into some exciting news. The US economy grew at an annualized rate of 2.8% in the second quarter of this year. Let's break down what this means for consumers, businesses, and the Federal Reserve's next moves. Economic performance. The US economy's growth rate of 2.8% between April and June exceeded expectations, which were set at 2%. This increase marks a significant jump from the 1.4% growth rate in the first quarter. This positive trend indicates continued consumer resilience and a strong economic performance. Consumer spending and demand. One of the main factors driving this growth is consumer spending, which rose by 2.3% in the second quarter, up from 1.5% in the first quarter. This indicates that consumers are still confident and spending money, which fuels economic growth. A key measure of demand that excludes inventories, trade, and government spending showed a 2.6% rise, matching the previous quarter's rate. Federal Reserve and interest rates. The Federal Reserve, having raised interest rates to a 23-year high of 5.25% to 5.5% to combat inflation, is now considering when to start cutting rates. With inflation now around 3%, down from pandemic highs, the Fed seems to be succeeding in controlling price pressures without triggering a recession. Market reactions. Despite the positive GDP data, traders have slightly reduced their bets on interest rate cuts. However, the market still expects 2 to 3 rate cuts this year. The 2-year Treasury yield, which reflects interest rate expectations, remained flat after the GDP report was released. Expert opinions. Economists like Veronica Clark from Citigroup and James Knightley from ING have mixed views. Clark notes that while demand remains strong, there's a trend of slowing consumption and concerning signs in the labor market. Knightley points out that the economy faces growing challenges despite the recent rebound. Both expect the Fed to cut rates in September. Labor market and future outlook. The labor market is showing signs of softening, with layoffs increasing and the unemployment rate inching above 4%. However, it remains historically low. The Fed is aiming for a soft landing where inflation decreases without causing a spike in job losses. Global context. The US continues to lead among advanced economies, with the IMF projecting a 1.7% growth for these economies in 2024. In contrast, global growth is forecasted at 3.2%. Statements from leaders. President Joe Biden and Treasury Secretary Janet Yellen have both highlighted the strength of the US economy. Biden emphasized job creation, rising wages, and falling inflation, while Yellen pointed to steady growth and declining inflation as positive signs. In summary, the US economy's 2.8% growth rate is a positive development, showcasing consumer resilience and strong economic performance. As we look ahead, all eyes are on the Federal Reserve's next moves and how the economy navigates potential challenges. If you found this video helpful, don't forget to like, share, and subscribe for more updates on the economy. Thanks for watching, and we'll see you in the next video.